Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
If you have any questions about mortgages or real estate, give us a call at 521-TALK. That's 521-8255.
Or text 1-800-580-CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
A spectacular Saturday.
Yep. Oh, it's Frank, you had all morning to have a cough, but you had to cough just as we get on the air.
Just before. Ooh,
because I plan my coughs.
Boy,
Look at that. 2
good
seconds already.
I think
morning.
it was 3. It might have been
Good
3
morning,
seconds.
Ottawa.
3 seconds, we're already fighting.
You know,
morning,
I was
Ottawa.
thinking this morning as I was doing all of this great preparation for the show today that we've been together longer than most people have been married.
That's why we fight like married
Exactly.
couples. Yeah.
Exactly. I was just thinking that.
Yeah. We do.
We've been happily doing the show for 15 years, but we've been doing it for 18 and a half years.
Isn't that always a marriage, though?
I don't know.
Yeah.
That's it.
15? You think we were happy for 15?
Well, the only time I'm happy is when Frank's not on the show. He's off on one of his trips, and sorry,
That's not as often as me.
Conference.
All right, so we had a pretty big week.
Lots of stuff happening.
Federal Reserve
obviously.
dropped only a quarter point in the States.
Expected, though, a quarter point. I think the half point that happened in September, bond markets went the other way, and we'll see. I mean, I think with the new government that's forming in the U.S. and he's back.
He's back.
Yeah, we'll see what happens. I mean, tariffs are not good. Obviously, hopefully, he mentioned them as often as he did, but hopefully. Because they're very inflationary. So tariffs are very inflationary. So the last thing you need now is for inflation to go up, because we know what happens when inflation goes up means interest rates go up. And he's very pro. So if we look at his 4-year period, 2016 to 2020, the U.S. and Canada were on par at 1.75. Today, the U.S. is at 4.5, and we're at 3.75. So there's lots of room to come down. He's very much in favor of lower interest rates. So hopefully that's a good sign, but he's got to balance the two. So if you're going to put tariffs in, then inflation's going to go up, and you're not going to be able to lower interest rates. So hopefully he's going to pull back on the tariffs, at least for most countries. He might implement it to a couple of countries, and he won't be able to implement the amount that he's talked
Not
about.
20%, no way.
No, he can't do that.
We saw the rates. I know you said it was a blip, but we saw the rates in the States actually go up.
On Wednesday.
On Wednesday, it was
On
a short
Wednesday.
blip. But you know what happened here when that happened is I probably fielded 8 to 10 calls about what's now happening to the rates here.
Right.
Are they still going down that potential half a point in December, or are we actually going up our rates? And I said, well, I don't think we're going up. But I got like 8 to 10 people who called me on that.
It's funny you got that, because I got calls about what do you think real estate prices are going to do. Like maybe those people are calling the wrong people.
Yeah. Call Frank if you want to know rates. Call me if you want to know real estate. Yeah,
because I got calls on that. Like, what do you think is going to happen to real estate now that Trump's in power? It's like, I don't know. I mean,
Call Paul.
Yeah.
Like,
well, I can tell you, and Greg will probably attest to this because I know you've been quite busy here in November. We're just shy, a couple sales shy of 50 sales already for November as a team. We're the 9th of, what are we, the 9th of November right now. We're almost at 50 sales. So the market, usually November.
Where would you have been last year?
Oh, we probably would have done about 45 maybe.
the whole month or just by November
maybe
9th?
Let's say 45 the whole month last year maybe, because
Yeah.
November is usually a really quiet month, and we're just shy of 50, and we're not even a third of the way through the month, and we're just shy of 50. I mean, that's a pretty solid November, and I'd like to say that our numbers usually like they coincide with the market numbers too. So, I mean, if we're way up, I expect the market potentially to be up. So we'll see when the numbers come out to see where we are in November. But, at first when the rates went down at the end of October, we didn't see much activity. Now, I know the fixed rates didn't go down. The variable went down. The prime went down. But I thought we'd see a little bit more of a flurry. We didn't see it right away. But as we're now into November, I do believe that we're starting to see a little bit of a flurry going on. The market's starting to go. And, I'm interested to see what happens even the next 2 weeks, what's going to happen. I think if it continues this way, I think we might be heading into a really strong fourth quarter, which I've already said we will have as a stronger fourth quarter. We're now starting to see it. So we're having a much stronger November than past probably 5 to 10 years. December might be really strong as well, and it might be very much like at the end of 2021 leading into 2022 when it went from really, really slow, started to pick up, and then boom, it just took off. So So who knows? And I was actually meeting with one of my agents this week, and she said to me, she's like, people are asking me, should I be listing now or should I be waiting till spring? And then I talked to another agent and said, people are asking, should I be buying now or should I be waiting till spring? And I said, to be honest with you, Greg and I just shot videos. We shot about 25 videos a couple weeks ago. And 4 of the videos were why you should buy now, why you should buy in spring, why you should list now, why you should list in spring. And there was not one bit of those videos that I did not believe in, meaning I do believe you should list now, but I also believe you should wait till spring.
So it's a no-lose.
It's a no-lose because, if you're listing right now, we're starting to see buyers come back into the market. First-time home buyers, investors are slowly starting to come back into the market. A lot of people have the typical, end-of-year thing where they're like, oh, let's just wait till spring. We won't put it on till spring, or let's take our house off the market and put it back on in spring. So we're now seeing less inventory. We're well under 5,000 listings on the market. We were over 5. Now we're under. So there's less inventory in the market. There's buyers coming back. So what a great time to have your house on the market. But then again, saying that, spring's also a great time to have your house on the market as well. But what's going to happen is a lot of these people who are not being able to sell right now are going to bring their house over to spring. Plus all the people hitting the market in spring, we might have a lot of inventory come spring. So I'm not saying it's not going to be it's going to be a bad time then. I'm just saying for the first time in a long time, you should put your house on the market right now, or depending on your area, you could wait till spring. There's not a wrong answer right now.
So months of inventory now are 2.8.
Yeah.
Which is down a month from last year.
It is.
What's going to happen in the spring?
Well, I think in the spring, we're going to probably go through our typical spring market. And if we can see the rates come down, if we get a 0.5 point come December and a 0.5 point come January, I think almost all the first-time home buyers are going to be back, and so will investors. So we're going to have a lot of buying power onto the market right now. And yes, there will be more inventory because the carryovers from the fall will hit the market. New listings will hit in spring. So there will be a lot more inventory, but there'll be a lot more buyers as well. So I do think that potentially we might see the inventory drop a little bit. So the months of inventory drop a little bit is what I'm probably going to think is going to happen in the spring market.
Now, there's one other thing to think about. Excuse me. Possible layoffs now with the government, permanent employees. There's talks of it now.
Yep.
What happens now if they start laying off people in the government in the spring? That all of a sudden it makes it more difficult.
Well, and that's the problem right now too, right? Like we're seeing that even though the rates are coming down, where people are like, you know what, I can start to afford that. But there are some sectors of the market that aren't very strong in their or feel strongly about their employment, and they're nervous, so they're not getting into the segment. So we are seeing a bit of both. We're seeing people who are not getting into the market because they're nervous about their employment, and then we're seeing other people that are very strong about their employment and looking at the future is very positive.
But my thinking is, if you want to sell, don't wait to see what happens there. Try to get sold before you have to worry about any of that.
Before you have to worry about losing your job.
Or before you have to worry about other people taking it slowly.
Yes, 100%. But like I said, though, I strongly believe that whether it's now or in the spring, before I would have said, you know what, it's getting late in the season. You might as well wait till the spring. Now I'm like, I don't know if I'd wait. Depending on where you are, how much product's on the market, is there a lot of new builds going on that are on the market? Is your product that you're selling good for first-time home buyers or not good for first-time home buyers? Because I could give, 10 people ask me, 5 people I might say get your house on the market now, and the other 5 I might say wait till spring. So we're in a bit of a weird market, but I'm very positive, and the signs are very, very positive that we're churning to a very, very strong Q4 up until 2025.
Are you starting to get notified a little bit more now with people that have been on the fence coming back?
Still nervous. A lot of first-time home buyers are still nervous.
A lot of questions, or are they at least coming back and looking to be approved?
They're looking at it for sure, but once you tell them what the payment is, I think there's going to be a pent-up demand in January and February, only because the 30-year amortizations come into play. So once the 30-year amortizations come into play, that makes a big difference in January and February, because when we speak to first-time home buyers, we'll say, here's what your payment would be now, but if you bought post December 15th, which is when the 30-year amortization comes into play, then here's what your payment will look like, and you can sense that little bit of relief. It's like, oh, okay, that I think I can do.
Why is the Bank of Canada saying that's a bad idea?
Well, all they're doing is they're trying to put I've always been of the type, okay, 30-year amortization is just a guideline to set your payments up at this time. Just because you choose a 30-year amortization, the interest is not calculated in advance. You can pay off your mortgage in 10, 12, 15 years, even though you start at 30 or 25. It doesn't really matter. You take advantage of the prepayment privileges. You put extra money towards your mortgage. That's how you reduce your interest. It doesn't make a difference whether you choose a 15, 20, 25, or 30-year amortization. All it does, it gives you lower payments, so you are paying more interest as you owe more. But if you're going to be aggressive and pay it down and do the other things that you want to do, and I think families go through stages in life where if your kids are in competitive sports, you don't have as much disposable income. If you're at the stage where you're just starting your family and you got to pay for daycare, you don't have as much disposable income. So starting off with that 30-year amortization is okay. And then as your kids go to school and now you don't have that daycare cost, you can increase the payment by that daycare cost. And all of a sudden you're reducing your amortization by 3, 4, 5 years, and so on and so on. And as you go through phases of life, but I would say start off with a 30-year if you could, because that lowers the payment. And then you can increase the payment right away to lower the amortization. But if you started with the higher amortization, at least if something goes wrong, you're able to go back into the bank or lender and say, hey, I want to decrease my payments again because I lost my job, or my kid now is in competitive sports and it's costing me $8,000 a year that I got to apply towards that. So again,
once you've
options.
set it at the low payment, you can always go back to it.
You can increase the payments. Most banks, anywhere between 10, 15, and 20%, you can increase the payments every year.
No, but you can lower right back to the original
But you can lower it right
base.
back to the original amortization. You can always go back to your original amortization.
I think a lot of people, especially young Canadians, are conditioned from their parents to get that mortgage paid off as quick as possible.
But you can still do that, though.
I know you can, as Frank was just saying, but they're conditioned to that. So they're like, okay, well, I'll take a 15-year, I'll take a 20-year, I'll take a 25. Whereas you can still pay it off just as quick if you took a 30. You just have to be more aggressive.
Yeah, I'm
right.
with Frank. I'd rather the breathing room,
The messaging this week was just negative. It's like, well, then why put it? If you're going to institute that message, then don't put the 30-year amortization. But if you're truly saying, we think Canadians need 30-year amortizations because the housing is over the top right now, the prices are way too much, cost of living is too much, well, then you can't come back and say, well, but we warned Canadians, maybe they shouldn't take the 30-year, don't take advantage of the 30-year. Well, that's ridiculous because, you can only get a 30, you've been able to get a 30-year all along if you're 20% or more in equity in your home, and you could be a 60-year-old and they can't discriminate against age and you can get a 30-year amortization. So that whole thinking doesn't make any sense.
521-TALK, 521-8255. We will be right back.
We return to Open House, the real estate and mortgage show on News Talk 580 CFRA.
Welcome back. Paul Rushforth is here. Frank Napolitano is here. Paul, now that it's a good day to put up Christmas lights today, and I'm sure a lot of people are.
Yep.
If you are thinking of selling, how Christmas crazy should you be going?
Good question, Steve. And listen, I mean, if you're selling right now, obviously you're serious about selling.
I know he must be mad at me.
Yeah.
No,
Steven.
Sorry, Steve. N. If you're serious about selling right now, obviously you still have to have your Christmas, or you still have to put up your lights and have your decorations. And what it does do though is it shows your house more cluttered. So when you show
the exterior is fine, right? You can
absolutely
it makes it show well.
Absolutely. And most people are celebrating Christmas. If you're not, I get it. But if you are. You want
even
it,
if you're not, it
you
looks
want
pretty.
you still want it to look festive. And listen, anyone looking at your house at Christmas time, that's a serious buyer. No one is going out looking at properties at Christmas time just for what's the term, SH and giggles. Like no one goes and looks at homes at this time of year just for SH and giggles. Like most people are very serious. So, but what I would say is be very cognizant of decluttering your house too much for square footage wise, because when you have a more cluttered house, it shows a square footage smaller, which does hurt you in getting your price because people are still looking on square footage. So it might have to be a bit of a leaner Christmas when it comes to some of your decorations if you're still trying to sell your house over Christmas.
Yeah, I would think like a tree would be fine, but you don't want all the little knickknacks and
Well,
stuff.
the knickknacks is hard because, I know when Petra and I, we take down our decorations and stuff like that, we're like, wow, our house shows so much bigger. And when you put it up, it's great. It's festive. It's beautiful. It's sweet. but it does show more cluttered, and it does cut down on your square footage, which could cut down on your price. If they're looking at your house that's cluttered and a neighbor's house that's not cluttered, the neighbor's house, even though it might be the same square footage, might show bigger than yours, and therefore they might buy the neighbor's house. So just be very cognizant how much you decorate the interior of your house. Exterior doesn't matter. I mean, other than this time of year, I mean, it's very important to make sure your gardens are cut back and gardens look good and grass still looks as good as possible, and rake the leaves and make it appealing and get some nice things on your door, maybe a reef on your door, and still make sure your curb appeal looks great. But the inside's also very important, especially at Christmas time.
Greg, what special camera do you guys use? Because some rooms look way bigger than they really are. With
the lens,
eyes.
Isn't
so
it?
It's the lens?
It's the lens, yeah. It's an ultra-wide-angle lens.
It is, eh?
Yeah.
So do you have it the opposite? Because I'm not going to do a portrait. I want one that makes me look thinner. There's one do it the opposite way?
There's always Photoshop,
Yeah.
Frank. There's
Well,
always
Well,
Photoshop.
you know what? Ever since we started recording this show, I've probably bought about 4 different cameras, because they set up a camera on me and they set up one on Frank, and they keeps breaking Frank's camera for some reason. I don't know why. It must be his appearance, but it just every time I got to buy a new camera.
Yeah, you're right. You're so much better looking. So much better.
Sorry, just a lot younger. My just a lot younger. But anyways, yes. So, but you know what? The best is when I get feedback on one of our showings saying the pictures were deceiving. They showed bigger than it was
But
actually
you want to
was.
show the whole room in one shot, right? If you can.
Yeah, for sure. I mean, the idea of the photos is to get people to come to the neighborhood and walk in the door. You're not going to, well, you should not be making a decision based on just seeing photos online. You need to drive into the neighborhood and look around and go, is this a neighborhood I want to live in? Oh, you need to pull up to the house and go, oh, my goodness.
But you're trying to give people a sense of the full room.
Yes.
It's almost impossible to take a picture of a
Absolutely,
room
yeah.
and
And
get the whole room in, right?
Correct. And you can't do it with standard lenses. Like you either lose the ceiling or you lose the floor, or, and at the end of the day, you're selling floor space when it comes down to it. So you want to get people interested in the door. That's how you get a deal done.
And I always tell people that the pictures are more important than your showings. Showings, you can actually look past a couple things, but in pictures, you don't look past them. So if there's beds aren't made or there's garbage in the place, people don't look past that.
And you're studying them, right? You have a lot of time to just
you
look
can
at
study them. So the pictures are worth its weight in gold. So I always say you need to be fully prepared for the pictures. But in this day and age that there are still people taking pictures with their iPhone.
Well, the iPhone quality's pretty good.
The quality's great.
The photographer,
They're talking about realtors, not people.
I'm talking about
what, realtors aren't people?
Realtors. Well, no, but realtors are using iPhones to take
pictures.
But it looks good on commercial, like the commercial Apple.
Yeah, Apple makes it look amazing.
You can do a movie, like you can film a movie with your phone.
Listen, I'm not saying there's anything wrong with the iPhone, but
It's
I know it's who's behind it. For example, I know if Greg gave me his equipment, I could sure go in and shoot a house and make it look good, but it's going to be nowhere near what Greg makes it look, because he's done over 4,000 shots.
I think if Greg gave you his equipment to take a picture, you'd go, Greg, how do I work this?
I actually
turn this
listen. I actually had. I don't mean to get. This is probably not something I should say on the air, but I actually had a seller. Greg went in, took pictures of this property, and I looked at the pictures like, wow, those are gorgeous pics. The house looks absolutely amazing. And the seller calls me and says, I don't like my pictures. They're garbage. And I said, what? I said, listen, I've sold over 9,000 homes. I've seen lots of pictures, and Greg's the best in the industry. There's nothing wrong with those pictures. Fought me. I said, do me a favor. Take pictures with your iPhone. Show me what angles you would have done, and then let me comment on them. Greg and I had a good chuckle. It was a good comedy hour. Let's just say that. But when you know, right? And Greg's been in so many homes that he knows proper angles, proper lighting, where the sun's coming in, where lights need to be on, where they don't have to be on, things like that.
What's going to detract from the room?
Well, and I will say that house did sell in like 2.5 weeks.
Yeah, with those terrible pictures of yours,
over
Greg.
$1 million. So.
Yeah, exactly. But the beauty
Not
is
that he's sensitive about it.
Yeah, no, he was mad. He was mad because
he had his mic on in like 10 seconds when he started.
No one's ever called Greg and said your pictures aren't good.
No, it happens. It happens sometimes. Like people just don't appreciate it, and as Frank brought up with the wide angle lens, sometimes people are a little, like, oh, it doesn't quite look like my house. And I understand these are marketing photos to get people in the door, and they're not supposed to represent your vision of it. They're supposed to open it up for the potential buyer pool to see their vision.
Wow, he's good.
I'm so used to people using wide-angle lenses on me. It's
Well, they have to.
yeah.
I'm not going to go there. Okay, now I know. Yeah,
the awkward quiet.
Yeah, the awkward quiet.
Yeah, right. So the staple hit it.
Yeah.
521-TALK, 521-8255. We'll be right back. Welcome back to the show. All right, I think, personally, it's way too early to be talking about the rates on December 11th.
Why?
Well, I was listening to another show last weekend, and the realtor said it was on December 4th. So when it's actually December 11th, Bank of Canada.
But
so
first of
U.S.
all,
Treasury's December 18th, Bank of Canada's December 11th. So we're going to go through a 2-week period where we're going to see how the Canadians do, which, again, expected a 0.5% drop in prime. Right now is expected.
Yeah, but that's only
Could be a
50-50 right now. Eh?
Yeah, it's 50-50, but it's, again.
It has to happen.
Well, we still got the jobs report, inflation, and GDP data.
You got it. That's exactly what he's waiting for now. And if those come in as expected, likely going to be a 0.5%. It could be a 1/4 point, but we know we're going to get a drop of some sort. So it's either going to be a 1/4 or half, which means that because fixed rates haven't come down, we're now approaching a territory where the adjustable or variable rate and the fixed rate are going to be very closely aligned. And then you got to make a decision. Do you take a fixed rate? If rates are still projected to come down throughout 2025, then why would you take a fixed rate?
Yeah,
why would you take an adjustable or variable rate mortgage if rates are expected to come down? So,
but why are mortgage brokers? Just like every industry, there's good and there's bad, but there's a lot that are still pumping a 5-year fixed out there.
They are
a lot.
Mainly banks, right?
Mainly banks, but
banks are for sure. Banks
Yeah.
are pushing the 3-year and the 5-year. They're not necessarily pushing their adjustable or variable. The spread's better on fixed rates right now than it is on
and they get
the
paid
adjustable
more.
variable.
And they get paid more.
Well, again, if you're a branch staff, you're not getting paid any more or less. You got to do your sales. Your bonus relies on the sales. But at the end of the day, again, I mean, I always say there's a lot of people in every industry that take shortcuts. And no different in our industry, the mortgage broker level. And I think there's realtors that some do a really good job, get educated, learn every day, and are able to translate to a client what's expected to happen moving forward. And then there are other ones that don't do any homework. All they want to do is sell, and a 5 years an easy sell. And you listen to the bank. And I always say, when I worked at the bank, I listened to the bank, and they said, do this, you do that, thinking they're doing what's best for the client, when you have to leave sometimes to realize that the advice I was giving was what's best for the bank and their bottom line, not necessarily for the clients. So, as a good mortgage broker and mortgage agents that are out there, they give advice based on what they're reading, what they're seeing economists predicting, and they're translating that back to clients. Then the client will go to the bank, and the bank says the exact opposite, the bank personnel, despite the fact that their own economist says what we're saying. So that's where it's confusing for Canadians. And again, there's lots of Canadians that don't focus on finance, so they're not very, they're financially illiterate. Like, they know what they do for their jobs is really good, but they just don't get it. They don't understand the numbers, and they just go with whatever the bank person recommends. And in a lot of cases, it's probably the wrong advice.
Well, it's a no-brainer if you want a 1 or 2 year mortgage because the variable is lower.
Well, that's it, right? But there's still some the 3 year. So now what banks are pushing is the 3 year.
So 4.57 for the 3 year.
Yeah, which is a good rate.
Yeah.
I'm not saying it's a bad rate. In today's environment, it's a good rate. The question is it a good rate 6 months from now or a year from now? Or if rates are projected to come down the way many are predicting, many economists, including the bank economists, the economists that work for that specific bank, are suggesting the Bank of Canada is in a position where they could drop prime rate by as much as 2 percentage points between now and the end of 2025. So
I think we're going to end up around 4%.
On prime?
Prime.
Well, 3.95 was the prime rate in 2019.
Yeah.
And no different in the U.S. Again, both banks, the Treasury and the Bank of Canada, were at 1.75 for the longest time. So, and the economies were humming along quite nicely until the pandemic hit. So why not get back to that number? And at that time, fixed mortgage rates were 2.89 to 3.19. Most Canadians are more than happy with that. They will lock in for 5 years if the interest rate is in the low threes.
The ultimate rate to have no effect is 2.75?
2.75 is you mean the Bank of Canada?
Yeah.
Yeah, that's the Bank of Canada, and then you add, well, no, that's a neutral rate. That's what they call the neutral rate.
Exactly.
But it was 1.75 in 2019.
Yeah.
So right now we're at 5.5% prime.
5.95.
5.95, sorry, prime. And I feel like if we get down to 4, most people who are taking mortgages now are 0.95 or 0.9%.
Anywhere between half to 1%.
So you're going to be in the low threes by
low to mid threes. You could be in low to mid threes by the summer,
which is palatable.
Which is palatable and which is very acceptable. And then, like, fixed rates are going to take a little longer to come down. So there's no question that we're going to see prime rate a little more aggressive to begin with for the next 3 or 4 months. And then we'll start to see the fixed rates adjust probably in the spring heading into the summer.
So you're saying low to mid threes by next year?
By next year on a variable or adjustable rate of prime
why would you
-1.
take a 4.5, 5-year right now?
These are nervous, right? You saw what happened in 2022,
That's a full point, though.
2023.
That's a full point, and a full point over the course of another 4 years after.
It is. There's no question. But for some Canadians, they just won't sleep at nighttime being in an adjustable rate mortgage. It's just not for them. And that's okay. I mean, if that's what you're comfortable with, then it's your money. You choose that term. If you do it with one of the big banks, you will not be able to get out because the penalty will exceed what you would save by getting out. If you do it through a mortgage agent, through a non-bank lender, then the penalty will be much more acceptable and you'll likely be able to get out of it and get into a lower rate. So that's the difference. So the banks can talk all they want, and I always have them compete against me, and then a client will call me, and I say, well, then get the bank to put in writing that if a year from now you want to break the mortgage, you're going to do it based on what the going rate is as opposed to using their posted rate calculation. If they put that in writing for you, I would definitely go with them. And none of them come back with that.
And I would like to see it based on your advice.
Yeah,
1 year from now, based on your advice, if you were wrong.
But you know the worst part is because people don't know, and we're in the industry, so we kind of know a little bit about rates, a little bit about mortgages, a little bit about real estate. Like, that's our job.
I hope you know a little bit
more
than a little bit.
I
was trying to be humble there, Stephen. I was trying to be humble. But yes, we know a lot about rates. We know a lot about real estate. So we're in the industry, so we kind of know what the best rates are, what the best prices are, what areas are doing, and things like that. But there's a lot of people, like when I just recently got a couple of my mortgages renewing and I got my letter from the bank, I chuckled because I was like, oh, really? So I could probably get prime minus 0.95, put me in around the 5% range, and you're offering me 7.05. Isn't that so generous of you?
Is that what they were offering?
Oh, it was ridiculous. 6.5 to 7.05, and it was just ridiculous. And I'm like thinking to myself, okay, I'm going to call these guys. I'm going to blast them at first. And then secondly, I'm like, you know what? How many people actually sign that renewal at that 6.5 or 7.05 that could be getting a 5 or a 5-year fix at 4.5? Like, how much? That's where the banks are really preying on that. And that's why I really hope people are either listening to this show, going to Frank's website, like learning what the best rates are out there, because there's a lot of people that are probably paying a lot more for their mortgage than they need to. So, Frank said, your best 5-year fix is somewhere in the 4.5 range. Well, your best variable should be somewhere in the 5 range. Low fives, if not 5. Yeah.
Low fives. And again, I mean, there's a lot of Canadians that don't like to negotiate. It's just not in their blood. It's not who they are.
But should you even have to?
Well, yes. No, when you're with the bank, you need to. No, you shouldn't,
exactly.
but you have to. Because the bank will never put their best foot forward up front. That's not who they are. I worked there for 22 years. It's one of the reasons I left, because I did not like that I was getting my hand slapped every once in a while for giving the best rates. And I would say, but I don't get it. Like, I just gave the customer before that rate. Why wouldn't I do the same thing? Well, no, because maybe that customer would have been happy with a quarter point more, and they would have said, yeah, I'll sign. Where do you want me to sign? But that's on me then. Like that,
there's nothing worse.
Mad at me. It's just not who I am.
There's nothing worse than when they don't give you, if you're a loyal bank customer or something, they don't give you the best rate. It's like, this is how and I've said it before in the show, exactly how I shop for a car. I walk in, I'm like, I want this car, I want this in white, black leather, blah, 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 blah. Give me your best rate and I'll sign right there on spot today. If you have to come back and then go back to your manager to negotiate more, I walk out the door. And 9 times out of 10, they come back. They're like, "Oh, Mr. Rushforth, here's how much this one will cost you. Okay, can you do a little bit better? Oh, let me talk to my manager. We can probably come a little bit. I'm out.
I'm out. Same here, and I'm no different. So this is what the banks do. So the banks will say to clients, "Here's the rate we have, but if you can get something better, let us know, and we'll probably be able to match it." It's like, what?
What? Yeah,
what?
No.
So I got to go do some work for you to give me a rate that I should be getting right from the beginning, because you're going to give it to me anyway.
Which one is the customer again?
Yeah. Well, that's just it. Who's got to be loyal to who? And sometimes it's blurred. The vision is blurred for Canadians.
I'll tell you something. If I get a letter from the bank, like Paul did, around 7%, and I've got to go out and do all of the footwork, and the best they could do is match all of the work I've done, why would I stay?
And I say to clients, this is what I say. They've offered you what? 4.89? Well, I've got 4.59. Now for them to get you, they got to match the discount I just gave you. So not 4.59. Now they got to go to 4.29.
Yeah.
I just got you 30 basis points better. Yeah. You want to play that game?
Yeah.
Now you go 30 points better. Otherwise, why would I stay with you?
Yeah.
And don't give me 4.58 and say I'm going to stay with you. No.
Yeah.
That's not the way it works.
But
Canadians are softer. Americans don't put up with that stuff. Americans, you got to give them the best rate up front because they have no loyalty whatsoever. Canadians are way more loyal to their banks.
But why are
than
we
they
as
should be.
loyal to our banks when the banks aren't as loyal to us?
Because that's the way the banks have trained Canadians to be.
Listen,
they've done a good job of it.
Canadians will drive 7 kilometers to get 2 cents a liter less for their gas. Yeah, yet they won't negotiate their mortgage, and their mortgage is at $500,000, and a point drop is a lot of money. Half a point drop's a lot of money. They'll drive 7 kilometers to get a smidgen less on their gas than they will for their mortgages.
Not me. I'm loyal to Esso, so I'll always pay more.
You'll always pay more to Esso. Yes.
You know what it is though? It's because again, I mean, they're not comfortable with negotiating. They're not comfortable with confrontation. So for them to go to another gas station, they don't have to talk to anybody. They just save the money. But if you have to actually get involved in having a conversation, there's a lot of Canadians out there that are just not comfortable. Exactly the reason why you want to use a mortgage broker, just like you use an insurance broker to get your insurance. Let the insurance broker do the negotiating on your behalf. It's no different than what a mortgage broker and agent does. We negotiate on your behalf, so you don't have to do that.
And the best part is no posted rates.
Nothing.
So your penalty is not going to be through the roof.
And same thing with variables.
They're getting you a lot of different ways here.
Yeah, it's no different with the variables, right? So 4 out of the 5 big banks offer variables. 1 offers adjustable rate mortgage. Real quickly, if you need to convert it, because that's the whole purpose, my advice right now is go into it now because rates are coming down, and then as fixed rates come down, then convert it. But the question is, so what rate are they going to convert you at? I can tell you from working at the bank, you do not also come with your best offer when it's conversion time because they got to pay a 3-month penalty to leave you. So even if your competition is offering 10 basis points more, your argument back to the customer is, but the 10 basis points more equals the penalty, so you're at the same place. Just stay with us. And I say, but that's where the mistake is. Now they're taking advantage of you as opposed to being loyal to you, and that's why you want to leave. And that's why you don't do a mortgage with a major bank, in my opinion, an adjustable rate mortgage, if you can avoid it. Or you get the mortgage broker to do it for you so that they can tell you what that bank's best rates are so that you go to that bank and say, here's what I can get from my mortgage broker with your bank, so now I expect that same rate from the bank based on conversion.
So as we go to break here, the one thing I do want to leave people out there, I know you're smiling, Steve, because you know I usually end things with a joke, and it's usually at Frank's expense. It's not going to be today.
Wow.
I'm actually going to end with something very, very serious, and it's not going to be at nobody's expense.
I was just laughing at your suit.
You too, eh?
If you guys only look this good. No, what I was going to say is as we go to break, please, 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 when you get that renewal notice from your bank about your mortgage, please rip it up. Don't even think of signing that because it's always going to be the worst rate you could possibly get on the street anywhere. And that is my 2 cents.
It's not always the worst, though. Some banks have become a little more aggressive, but you still want to do your homework. Yeah. There's nothing wrong with calling a mortgage broker and saying, hey, here's what my bank has done. They've offered me this renewal. I've got every week 4 or 5 clients that I say, here's what you should be getting. And they'll call me back and they'll say, Frank, they gave me a little bit more than that. Thank you very much. I got way better than what I was expecting. So now sometimes you do that.
So now I'll go to break with a joke at
here
Frank's
it comes.
expense.
Here it comes.
No, I'm just joking.
I'm not
talking. Do you remember that time you wore capris in here though?
521-8255. Boy, that's a deep cut.
Long shorts.
We will be right. Welcome back to the show. All right, can you guys tell me how people can afford to save for a home with the rents at what they're at right now? Even
it came down though, right?
Yeah, a little bit, but
still insane.
Pretty much.
I remember I just lost one of my tenants, thankfully, but I just lost. Well, no, but
they listen every week.
It doesn't matter. I don't care. No, I lost one of my tenants, and they've been in there for a few years. And I remember when they first got into that home and the rent I was getting, I thought I was hitting an absolute home run.
Yeah.
And then much like what happened at the start of 22 with the sale prices going through the roof, the rental prices did the exact same thing. And what I was getting probably 6 months later was cheap, was absolutely cheap. And the prices just skyrocketed. Now, I mean, 8-10 months ago, you were getting for a townhouse in suburbia, you're anywhere from 23 to 26. Now, like 25, 26 is kind of the standard, if not a little bit on the cheaper side now. So the rental is going up, and it's hard because I read an article this morning, and I think might have been in the Globe and Mail someone sent to me, saying that you are 10 times wealthier with your equity if you're a homeowner than you are with a renter. Obviously, that we know that. But the way rents are going right now, that number is even going to increase even more because
one bedroom is $2,045.
That's a lot.
That's one bedroom.
Listen, one of my tenants who had to leave mainly because of cost factor and they couldn't afford it anymore, they were looking at things in like the low 2000s, and we were talking basement apartments, basement apartments in that price range.
Yeah, bachelors.
And I'm sitting here thinking, listen, there's a lot of people that are scraping by cash wise and paycheck to paycheck, and you know, when rent's going up like it is, like $2,000 a month for someone to pay who's living paycheck to paycheck, and now it goes up to 22, and then you got utilities and gas and phone,
and you're trying to save,
you know, and you got all that, and you're trying to save potentially for a down payment down the road. It's virtually impossible. I mean, and it's nice to see that builders are actually starting to build purpose-built rentals so people can actually, but hopefully they make them affordable when they're purpose-built rentals. I know there's a couple builders sort of in the east end of Ottawa have purpose-built rentals, and the rental rates are crazy.
Well, they wouldn't build them if they couldn't make money.
Well, that's it. They're builders are building for profit.
Vancouver right now, the average rent, $2,945.
It's nuts.
Yeah.
$2,900.
Like it doesn't make any sense. Like it doesn't make any financial sense to get ahead.
Yeah.
And, you know, you got to consider whether it's worth living in those cities or going to, you know, the Manitobas and you know, it's not as nice a city, but at least you'll be able to live comfortably and pay rent of $1,500 or $1,600 for a 2-bedroom or a townhouse at $1,800.
Why do you think Alberta is going through the roof right now? Like Calgary and Edmonton are going through the roof right now because they're getting so many people from BC. Now, don't get me wrong. If I could live in BC, I'd live in BC in a heartbeat. I mean, if I can bring my business out there, because I love BC, like the Vancouver, Victoria area.
It comes with a cost.
Gorgeous, gorgeous, gorgeous. But it comes with a large cost. And there's a lot of people out there who are saying to themselves, it's probably the prettiest places in Canada, but I can't afford to live here. So I'm moving to Calgary. I'm moving to Edmonton. I'm moving to something a little bit more affordable. Same thing is happening in the States. We're seeing an influx of people who are moving from California that are moving to like Dallas, Texas, and places like that where you can get a sprawling 4,000 square foot bungalow there for, you know, $450,000. Like there's places that are where people want to live, but they're so unaffordable now that people are moving to areas like you mentioned, Manitoba, areas that aren't as luxurious, like the Maritimes. Right? They don't have the amenities that a lot of these other places have, but that's what affordability does. You have to move to those places.
How long does it take for the average young person to save enough 5% to get a house now?
Well, it's never mind just the 5%, but to be able to get into a house and know that you can actually afford it and continue to live the lifestyle that you're comfortable with. So
bank of mom and dad, right?
Yeah, that's but not everybody has access to a bank of mom and dad. So then for those that don't, how do you do it? So maybe 2 couples buy a house together so that you can at least build some equity to start off with. Maybe you buy a house where you're renting out some of the rooms. So you're buying a 3 or 4 bedroom home and renting out 1 or 2 of the rooms to help you get by so that you can save some money and build some equity. But those are the kind of the extremes that now we're facing, where 5-6 years ago we didn't face those types of extremes with interest rates being reasonable and a cost of a home. I mean, we've gone what, Paul, up $250,000 probably since the pandemic started on an average home. I mean, $250,000 for the exact same home in a 5-year period. It's crazy. I mean, if you're a homeowner, it's been awesome. But if you're looking to get into the market, that's what you're facing. That's the uphill challenge you're up against.
And where are we at now for people's mortgages coming due in the next year?
Well, most of them are coming off of 2.89, 2.79. Most renewals we're seeing
so
are
not
in that.
Horrible. Then.
It's not horrible. I mean, you're going up 1.5%. And I've had a few clients say it's not as bad as I thought it was going to be. You're right. It's still not great, But again, if you've owned a home for 5 years, you've seen your home go up 150, 200, 250,000.
Yeah.
It's not so bad. You can accept that a little bit more. But if you bought a house in 2021, 2022, when your mortgage comes up for renewal, that's when you're going to feel it because your equity hasn't quite grown as much as it could have. And now you're going from a 169, 179. You possibly could be in the 3s or 4s, and that's going to hit you harder.
Birthdays?
A couple, Paula White, who is Derek Artichuk's much better half. She's
Much
celebrating
better
her
half.
much better half. She's celebrating her birthday this week, as is Scott Hunter, one of our top agents. My good friend Otto Bernardi and Diane Lowe celebrating her birthday as well. She just retired from MBO, but celebrating her birthday just the same.
Nice.
I have a couple anniversaries. This was actually the 2-year anniversary of Tracy Arnett Realty merging with Paul Rushforth Real Estate. So, 2 years. Wow. So, and I was very, very fortunate to get 4 of her amazing rock star agents. So, Jonathan just celebrated 2 years with the company. Jonathan Hull, who's done the show for me before. And Jake Prescott, who celebrates today his 2-year anniversary. And believe it or not, this coming week, Tracy Arnett herself celebrates her 2-year anniversary with Paul Rushforth Real Estate. So happy anniversary.
What'd you get her?
Well,
Mercedes.
Anything to do with golf, because that's all she does these days is golf. So
good for Tracy.
Yeah, good for her.
Tracy.
Have a great week, folks.
Have a great week. Please support local business and charities.